Rob's Child, no investment advice. I've been waiting 2 years for this pattern to finish playing out on TLT. I wanted to do a midday video on this because of its importance as far as chart patterns go. Taking a look at TLT, going back to where it starts, around, you could say, August of 2022. This is about 2 years ago now. We have a very clear and distinct shoulder here that meets this line exactly hitting on April 6, 2023. We have a head, and then we again get to the line. It looks like the 27th or 28th of December 2023. And then we've just finally completed the, I guess we'll call it the right shoulder, left shoulder since it's upside down. And today, right now as I'm speaking, on July 31st, for the first time, I've been waiting for this pattern and been talking about this pattern for years now at this point. I had noted the development of this inverse head and shoulders, especially early in 2024, and saying how it looked like it was going to form that shoulder, and it did. And today we actually broke the neckline today, right here. This is July 31st, 2024. We have the FOMC decision at 2. It's widely expected to have no cut. And then talk at 2:30 with Fed Chair Jerome Powell. He's going to talk at 2:30, and we're all kind of assuming that he's probably going to announce in this meeting that the first cut will be in September. As it is right now, there's 100% certainty priced into markets right now that there will be a cut in September. There's a 0% chance of there being no cut. Back to the chart, I just want to bring up, well, how valid is this pattern here, a head and shoulders like this over, a two-year long period? I mean, granted, there's other ways of doing it. We haven't confirmed on a daily time frame. You also might want to use a weekly time frame where we have the weekly breakthrough and then a weekly confirmation, and maybe even a retest of it and a confirmation to give it extra support here. But today is a big day for breaking this trend line here. And the question might be, well, do patterns like this matter? And if you look historically speaking, before we went on this, before inflation kind of got out of control, before people realized it was out of control, we're all saying, oh, it's transitory, inflation is just going to go down. We had been developing this head and shoulders pattern starting in August, looks like, of 2019, and you can see pretty clearly here this head and shoulders pattern, which the target would be from, you take the top of the head to the neckline and you draw it there, and it's exactly what we did to form this shoulder of this new inverse head and shoulders here. And as you can see, they have about the same length of time. And so, I admittedly am not a chart pattern complete expert, but a lot of these patterns are pretty basic and they play out with certain probabilities. This is a high probability that we will now go the other way. And as far as the target goes, all we got to do is do the same thing. Look at the head, draw it down to the neckline. Again, this is sort of rough, but we broke through it. So the expectation for TLT is now to go to about 113 in the short term. And by short term, I mean, maybe within the next 6 months probably. Really amazing pattern here. The head and shoulders here, it playing out perfectly to the downside, and now we have an inverse head and shoulders here, and breaking through the neckline today. I suspect there will be a great rally in bonds in the near future as we're cutting rates, as investors start to wonder how much yield they'll be able to lock in at what rates. So as rates go down, people start looking further out in the curve to lock in their interest rate, in fear of it going down in the future, so that, and the longer you look out, the longer you can lock that rate in for. If you have an expectation, for example, like I do, that we're headed into some disinflation or even deflation, I expect long rates to drop significantly, and so I think it is of great benefit to lock in the current, rate of basically 20-30 year treasury bond yield, which is around 4.4 right now, 4.3, something like that, percent. And so that's where we are. I mean, the potential headwind here is the Fed meeting at 2 o'clock today, 2:30. That this could we reverse right back down out of this? It's possible, but I think this is time. I think this is finally. I think this is finally at where the bond bulls will finally get their bond bull run, so to speak. And with equity valuations being high, earnings looking like it's slowing down, employment looking like it's slowing down, people seeming to have less money, it all plays into the same, it all fits together and would benefit the value of TLT immensely. Again, no investment advice. There are no guarantees in market analysis, far from it, and nobody has a crystal ball except for me. That's all I have for you for this little mini episode. Thank you for watching. Hope you enjoyed watching. See you next time. Rob's Child.